All right, so this is followmetrades.com Saturday scanning. We're going to be looking for some good trades. I'm Dean Jenkins of followmetrades.com, the founder of followmetrades.com. And again, thank you for your time this morning, and let's see if we can go find some good trades. So finding good trades, can be like a needle in a haystack, right? There's over 8,000 publicly traded companies on the US exchanges, and then there's, hundreds of ETFs. And which one do you go trade? How do you find those? And, there's always companies in the headlines, but, sometimes those can be kind of like shiny objects, right? They may be making a bunch of news, but they may not be great trade candidates at the moment. So, over the years, I've been trading a long time. I've developed some techniques to just scan through and really try to find some really good trade candidates. We're going to go through that this morning. And we're going to see if we can find some good trades. And Kevin's calling from Portland, just down south. Welcome, Kevin. All right. So we're going to go find a few of those needles in the haystack. I'll show you how I do it. I'll take the approach. I'll share those trades that I find with you. And I've got some that I've been watching. I'll share you some of my favorite ones. And I'll extend an offer at the end of this to follow along with me each week if you like, with the trades that I'm taking in my own account and sending to my customers. All right. I'm going to be showing some trades that I like, live markets, trades that I'm in. But I'm a trader. I'm not a financial advisor. I'm not giving financial advice. All trading and investing involves risk, and risk control got to be used all times. All right, some of you, maybe this is the first time you've been on a webinar with me, so just take a moment to introduce myself, and while I do that, I'll go ahead and flip the camera on. So hey, I'm Dean Jenkins, founder of followmetrades.com, and I've been trading and investing over 25 years now. I started when I got hired by Intel Corporation in 1993, and they gave us stock options and incentive shares, and after a few years, that was worth a lot of money, and it got my attention. During that time, I got my business degree from the University of Washington, and I learned how to do fundamental analysis. And I did that for quite a while. Really mixed results. Fundamental trading is good for investing for long term, but for short term trading, it was very frustrating for me. So got mixed results, and I finally gave up in 2007, right before the crash. Got totally lucky. Afterwards, I just couldn't stay away. It was too enticing. So I got back in, but I got into some winning trades, kind of like, Bank of America, too big to fail, right? Got in at $7, it goes to 12, more than doubled or about doubled. And then you're stressed out. You go, well, should I get out and lock in my profit? But will I miss out on some more profit? But if I stay, will I lose it? Right? Without a system, it can be very stressful. And so I got interested in technical trading in about 2010, made a lot of mistakes, chased a lot of shiny objects, bought a lot of indicators, right? I finally settled about 2012 on the current system that I'm using right now. And I started getting consistent profits. And the key to that was risk management, right? And then locking down a trading system and being, disciplined about the whole thing. And in 2015, I launched this company that I run now called followmetrades.com, and it's been fun. I enjoy doing this. So that's me. Hi, I'm Dean Jenkins. I turned the camera off now, so that's not a distraction. And let's, I do have a website. I got this company I run called followmetrades.com. If you haven't seen the website, you're welcome to go check it out here. There's the homepage. And I log the results that I get year after year, and we're booking some good results, usually beat the indexes by a nice margin. And these results, you can see the details of them. Any of these buttons, you can go look at the actual trades that we took and closed, and the performance. And those are audited by a third-party CPA firm. If I put it on my website, I actually took that trade in my own account with real money. I don't believe in playing those games. Right. So a little housekeeping. Here's how we're going to run this session today. And ask questions as we go. Absolutely, make it interactive. It's informal. But I'm going to explain the setups I'm looking for. If you go looking in the market for a trade, you got to have some criteria. What am I looking for? So I'll explain that. I'll walk through my scanning technique then to try to identify a hand that meet my criteria. And then I'm happy to take a look at any stocks you're interested in, right? We can bring them up on a chart, use my technique, my criteria, and see how they look. Might just find a great one. May love it. I'll summarize what we found at the end, some actionable trades for next week. And I'll extend an offer if you want to follow along, see which ones I take, on an ongoing basis and follow along with my trades. That's the premise of the company, Follow Me Trade. So stay with me. and you'll get the most out of this time, right? I like quotes from smart people. Benjamin Disraeli said, hey, the secret to success is to be ready for your opportunity when it comes. When I sit down like this to scan for trades, I don't expect, particularly during the market session, I don't expect to go, oh, wow, there's a trade. I'm going to go place an order right now. What I typically do is identify a candidate that needs one or two more criteria to be met before I would take it. I put it on a watch list. I have alerts. And then if it qualifies and triggers, then I go take the trade, right? So I just want to be prepared. And Louis Pasteur, in the field of observation, chance favors the prepared mind. And I say that, you got to know what you're looking for. You got to have a game plan, a criteria, and then you can go, when you see it, you'll know it. Right? And here's a few things that I've learned over the years. I say I've been doing this many, many years. To be a consistently profitable trader, you need a plan. And that plan has to include trade setups, right? The criteria that would get us into a trade, and that's not a headline or the neighbor over the fence with a tip, right? There has to be some real objective criteria, right? And I want a high probability outcome, and I want a good reward to risk ratio. I don't want to take a trade that'll make $100 if it wins, and it could lose 1,000 if it goes wrong, right? That's terrible math, right? I want a trade that could make 1,000 if it wins, and if it loses 100. I like to flip that around. I want a good reward to risk ratio. Got to have risk management, a way of controlling loss on a trade that fails, because some trades are going to fail. That's the reality. And you got to have a system for managing your trade once you're in it, right? We can't let emotion dictate the actions that we take. So when I get into a trade, I have a scripted plan of when I'm going to take profit, when I would exit, and all the steps I'm going to take on in a trade. So you got to have a trade plan. Those elements of a trade plan are essential, regardless of the indicators or setups that you use, right? So here's the tools that I use, and I'll just give you a quick walkthrough. Right? I use Dow Theory. Charles Dow wrote this in the 1890s, published it in the newspaper that he founded, the Wall Street Journal, series of editorials. And he discussed his observations on how markets work, how they move. One element of that is trend analysis. So I use that. Trend analysis, and I'll show you a quick example of that. I use Ichimoku Cloud. It's a completely different study than Dow. So what I like to do is have a couple different studies that agree. So I use Ichimoku Cloud. I'll show you how I do that. And then I use Elliott wave. And I'm looking for either an impulsive or corrective wave. And again, I'll show a quick. And I use a very simple, repeatable version of Elliott wave. Again, the overriding criteria here is I want high probability that the trade's going to go the way I expect, and I want a great reward to risk ratio. And yeah, Bruce, I'm going to show you how I develop, a case for high probability in a trade. And let me show you an example of a trade, right? Get off the slides for a moment. And anybody else notice it's been difficult? It's been a difficult market to trade. Here's the S&P 500. And if you look at this and you go, wow, that was easy. Right, a year ago, all you had to do is go long the index, and you would have done super well. But all along the way, there was always things that could disrupt that. The saying is the market climbs a wall of worry, and there was plenty to worry about. And it actually has been kind of difficult to trade, right? And all of a sudden, for a long time, for a few months here, we were going kind of sideways. Did break out into new record highs, and we're long right now, doing well. Let me show you a trade I'm in right now. PayPal. So we are long PayPal. And this blue line is where I got long, and you can see it's gone up since then. And, there were several criteria that got me into this, that gave me a high probability setup for PayPal. But, we're in it. It's going well. We got a target up here at 307, right? And it's great. PayPal's doing well. We're enjoying this trade. Let me see. I think there was another one we took just recently that's doing well. Oh yeah, we went long on the gold miners, GDX. Did that on Thursday. And this is going well too. Again, here's the blue line that I got in, and we're already in a little bit of profit. We're in that trade one day, and I got a nice target way up here at 45 bucks on the gold miners. Gold looks like it's taken off. And I'll explain a couple of these indicators and how I analyze this, right? But those are a couple real trades, and GDX, that's still a good trade, all right? Again, we're in it early. We got a target. We're gonna let that one ride. All right, so Dow theory. How does Dow theory work in terms of trend analysis? Well, Charles Dow observed that an uptrend is a series of higher highs, higher lows, higher highs, higher lows. Downtrend is lower lows, lower highs, lower lows, lower highs. Seems like so basic and elementary, but until you really have it explained or observe it, right? It's not, once you do it, it's obvious. And it's super helpful because in a trend, if you look at a chart, a real chart, even, here's GDX, right? It had a nice run from $20 to $45 right here, right? But it doesn't go straight up. It goes up in higher highs, higher lows, higher highs, higher lows, right? And if you know that that's the normal sequence and you go long, you don't get freaked out when it pulls back a little bit and then start biting your nails. Go, what do I do? What do I do? Right? We use these higher highs, higher lows to set stop points. Go, well, eventually a trend is going to end. And when it does, we're going to get out when that trend rule has been broken. Okay, and here's the next page, right? We can confirm that an uptrend begins with 3 data points: a high, a higher low, and a new high. Trend began, continues, higher high, higher low, higher high, higher low, higher high, higher low. All of a sudden, it doesn't put in a high, and now it goes below the previous low. Trend ended. That's where I'm going to exit. If I get in here, I can't call the exact top, right? But I want to stay with the trend as long as possible. I want to exit when it ends. Downtrend's the opposite, 3 points, low, lower high, new low. That's the beginning of a trend, highly probable, nothing's certain in the market, right? Then lower lows, lower highs, lower lows, lower highs, lower lows. All of a sudden, doesn't make any lows, starts going up, takes out highs. Bearish trend is over. So that's a simple view of trend analysis with Dow theory. And if we combine that with some other stuff, then the odds get in our favor. It becomes a highly probable trend. So I combine it with Ichimoku cloud, right? Ichimoku cloud is this shaded area here. This yellow and purple line are, Ichimoku cloud is based on moving averages. They're different than simple moving averages. They're calculated a little bit different, but they're helpful, right? But at the end of the day, it's moving averages. And so you look for a short-term moving average cross, and you look for price to get above the Kumo, which is cloud in Japanese, right? This green shaded area here is the Ichimoku cloud in an uptrend. So if, look what happened here. We had Dow theory, right? This pulled back to there, right? So that was not a higher low, right? But we go here, high, higher low, new high, and oh, look, it broke above the Ichimoku cloud. The short-term moving average crossed above the long-term moving average. Now we got 2 different studies going, hey, we got an uptrend beginning. And by golly, we did. There it went, right? So that's all I'm using with Ichimoku cloud. You'll see on my chart, I have a very simple display. All I really care about at this point is the cloud, right? So here it is on my chart. You can see there is GDX. It was red in a downtrend. Now it's shifting into, and price broke above it, right? High, higher low, new high. Took the trade. All right. So that's Ichimoku cloud. If you're familiar with the indicator, you'll notice my settings don't look like the factory settings. I have a unique way of setting that up. And I'll tell you how you can get those settings at the end here, right? And once it proves that, a trend is like, hey, trend starting, the Ichimoku cloud does a great job of predicting support areas in these higher highs at higher lows. We got a thick cloud. It's like, yeah, that's probably, the trend is strong right now. That's probably just going to be a support level, and that's going to continue on. So that's very helpful. And Casey said, what time frame is best to determine a trend? Trends can emerge on any time frame. I'm showing daily charts, but you can have a trend on an intraday, 1-minute chart, 2-minute chart, right? The rules for a trend and the indicators I use, they work on any time frame. And you can trade on a smaller time frame and confirm the trend on the next higher too. If you want to trade a 5-minute chart, you can go look at the 30-minute chart and see if both of them are going the same way. All right, I use a simple version of Elliott wave, right? And Ralph Nelson Elliott developed this back in the 1930s, which interestingly is the same time that Goichi Asada was working on Ichimoku cloud. So, guys are half a world apart working on different studies at the same time. And now I use them both. But Ralph Mr. Elliott said, hey, it observes that there's like this crowd psychology that the market moves in impulsive waves and corrective waves, as crowd psychology, right, optimism, pessimism play out in natural sequences or waves, right? And what's cool is it's true, right? You can observe it on a chart. And then these waves can actually be predicted, right, using Fibonacci sequences, Fibonacci ratios, and you can predict where a retracement is going to go after a big move, right? And so here's GDX. Let me switch to a clean screen here without all the indicators and the analysis on it, right? So here's GDX, right? And let me compress this a little bit. So, you know, here's an impulsive move on GDX. I'm going to turn this thing off, get a little more room on the screen. Give me just a second. All right, now we just got price, right? That's all we need for this discussion, right? Here's a big impulsive move, obviously, right? From $16 to $45, I'd call that a big move in anybody's book. Well, you know, after a big move, there almost always is going to be a correction, right? Almost always going to be a correction. And we can measure that, right? We can go, okay, you know, from here to here, after this move, when we see it starting with a low, lower high, new low, right? How deep will that go? Well, most corrections fall into this Fibonacci retracement zone between 38.2 and 61.8. And look, here it did, right on target. Wow. Now, the next impulsive move up, we got an impulsive move, you got a correction. Typically after that, there's going to be a follow through impulsive move up to new highs. How high will it go? We use Fibonacci extensions. The first one was a retracement. This is an extension, right? And the target for GDX zone, the target zone's 46 to 56 up in these green lines. Wow. Now I showed you on my chart, I've got a target at 45 because that was the prior high. And so a conservative target would be, well, maybe it'll fail at that prior high. And so I'll switch back to the real chart here where I'm trading this thing. And what you'll see is I've got my target at that prior high. Now it could go higher. It could go higher, and that would be just fine, right? The blue line is where I took my entry, and the red line is my current stop. Why is my stop here? Because high, higher, low, high, higher, low. Dow Theory rules. If price goes down below this, it means that uptrend failed. So that's the point I want to exit. And now I calculate my trade size based on this distance, entry to stop. I go, okay, how much per share will I lose if it hits the stop, right? And that doesn't imply you have to have a stop loss order in, and you know, some people worry about the market makers or hunting their stops, right? You know, that's up to you. But the point of having a stop is if price hits that, I absolutely will close the trade, right? So I figure out the loss per share, and then I go, how much am I willing to lose on a given trade, right? I use the maximum of 2% of my account. So if you got a $50,000 account, that's $1,000, right? You go, okay, if I'm willing to lose no more than $1,000, right? I take the loss per share, right? Which here, right? 35.53 minus 33.82, call it $1.50. I divide that into $1,000, tells me how many shares to trade with. And then I also make sure that I don't put too much capital, right? If there's a close stop, that's going to imply a very large position. And so I would limit that to 15% of my account. So that's a little bit about risk control. And now I've got my target, which is based on these extensions and this prior high. And I go, okay, a very conservative target would be $45, and it could go higher. And so I go, so that's the reward, right? The potential reward is my entry to the target. That's how much I could make per share if it wins. This is how much I could lose. So I want this to be a high ratio. I want the amount that I could win if I'm right to be much bigger than the amount I could lose if I'm wrong. And that's a conservative number. It could go higher up into this target zone. And if it does, I'll just let it run, right? Because I'm not going to close this trade just because it hit the target, right? I've got an uptrend, high, higher, low, high, higher, low, high. And I expect it to keep doing this. It's not going to go straight up, right? And what I'll do is I'll take this stop, and when new higher lows are established, I'll trail my stop. And eventually, hopefully, up here, right, way up in the target zone, it'll stop, right? And my final stop will get hit and I'll close the trade for a nice win. That's how it works. Let me get rid of this. All right. So that's how I use Elliott wave, right? I look for an impulsive move. You can trade the correction, right? If there's sufficient profit down into here. Corrections are harder to trade. Sometimes they end up being complex and going for a long time. So the impulsive moves are easier and better to trade. And Bruce says, what's that indicator? This is a price oscillator at the bottom of the chart here, simply showing the momentum of the various moves, right? And we look for building momentum, and if in a long-term trend we see momentum beginning to get to shrink, then we know the trend is probably going to end. And Ben is asking, is there a time estimate to reach the target? Yeah, predicting time can be tricky. What you can do is, look, how long did wave 3? How long did the first impulsive move take? How long did the correction take, right? So you can see, because these things move, each stock kind of moves differently than the whole index, right? So, you can make a reasonable prediction that, well, we got wave 3 here. It took, April, May, June, July, August, right? April, May, June, July, August. It took 5 months, right? This is we're already really 1 or 2 months into this. So we could probably go, yeah, we're probably about 90 days into this, okay? And Richard, no, the bottom of the graph is not MACD. It is a price oscillator. And when you set up a price oscillator from, in the factory settings in your platform, it's going to come up as a line. I just changed that line style to oscillator, to histogram. So it displays like this. Okay. All right. Where are we at in the slide here? Let's get back to it. So I was explaining my setups. Okay. So risk management, I kind of went through that, right? As I discussed the Elliott wave and that GDX trade, right? You got to use risk management. You got to determine before you get into a trade the most you're willing to lose, and then calculate your position size based on that, and then exit the trade. You can get into real trouble if you just jump into a trade, with the assumption it's going to win. It goes the wrong way, and then you feel kind of stuck. Oh no, I didn't expect it to lose, and now that's too much. So I'm just going to wait for it to come back, right? And then it gets worse, and then it's pretty bad. And yes, that's happened to me. So now I get into a trade. I go, here's the objective point on a chart where the trend would have failed, and that's where I'm going to get out, and I'm going to make sure that the amount I lose at that level, if I do exit a failed trade, it's going to be acceptable, right? And then you got to manage the trade. You got to have a script, because you'll hear people say that you need to manage your emotions when you're trading. I think that's nonsense. I don't think we're capable of really managing our emotions, right? We're physiologically, when there's some external stimulus, we're going to have a chemical emotional response to it. Can't control that. But what we can do is have a script that we follow, and we follow the rules regardless of the emotion that we're experiencing. Okay, so that's and the way to, again, the way to take emotions out of the decision-making process, the actions that you take in your trading, is to have a predetermined plan. So when I'm going to trade, I have a script, right? I know where I'm going to exit. I know where I'm going to take profit, right? I know the steps are all scripted. There's no decision to make. I just respond to the conditions as they play out and apply my rules. And Bruce says, what's that white moving average? This light gray one is just a 50-day simple moving average, and then the heavier white one is 200-day simple moving averages. And they're helpful. So I use the oscillator here, and this is the OWL from traderscoach.com, right? It's a price oscillator. It is virtually identical to the standard price oscillator, except it has this pink dot that identifies the biggest move in the last 144 price bars, which is trying to indicate the impulsive move. And I use the 250. They're the most popular indicators on the planet, right? More traders are looking at the 200-day moving average and the 50-day moving average than any other indicator by itself. So if everybody's looking at it, I kind of want to know what they're looking at and if they're responding to it. And these crosses, 50 under 200 and then across 50 above 200 can indicate long-term trend changes. And then they also can be support or resistance areas. So I don't use any one indicator as, you know, this one qualifies my trade. What I do is very similar to like a prosecutor would do when they're building a case trying to, you know, convict somebody of a crime, is they build a case based on physical evidence and eyewitness in corroboration and you know, credibility and means, motive, opportunity, right? They try to build a strong case using multiple points to point to you know, a conviction. And I do that in a trade. I use Dow Theory, I use Ichimoku Cloud, I use the moving averages, I use the price oscillator, right? And go, okay, if they're all telling me something, well, that's really powerful, and that gives me a high probability outcome. And if I got 4 out of 5 that are pointing that way and one's, you know, kind of neutral, that's okay, right? So that's my approach. Again, there's no one indicator, you know, if this happens, you know, I'm firing off an order. All right, so let's go back. We're going to start looking for trades here in a minute, but it's important to discuss, you know, what is we're looking at, what's the approach here, right? So I showed you a couple trades. I showed you PayPal. I showed you GDX, right? Those are 2 trades I'm in. They're still good, right? Let's. So here's how I go about scanning, right? This is the whole premise of the webinar here. This session was, let's go find some trades, right? Here's how I'm going to approach it, right? First thing I'm going to do is just get, you know, big picture. What's going on in the market? What's the big news? What's the market doing? Then I create a thesis, right? Okay, here's the area of the market or the sector or the premise that I'm going to operate on, right? And then I narrow down, you know, a very big list to a manageable list. You know, I ultimately want to get, you know, 10 or 15 stocks, charts that I'm going to look at. And out of 10 or 15, I might find a couple of good candidates, put them on my watch list, and then when they qualify, pull the trigger, take a trade, right? That GDX trade that I showed you, right? I was watching that in my trading room. I was watching gold GDX back here, right? I waited weeks, right? A month before it finally qualified and triggered, and we took the trade. It was awesome. Okay. So let's start here. What's the big picture right now, today? So the indexes are at record highs. We got infrastructure, you know, coming. The current administration wants to spend a couple trillion, right? And there's some, you know, negotiations going on, shall we say. They're not going to make any decisions on that till the summer, so that's not going to affect this week's trading or the next couple of weeks. FOMC, they're going to tolerate some inflation, right? That's a change for them. We got no major economic reports coming out next week. And there's the normal weeklies, but no big deal. We're in the middle, just getting started on earnings season. We got some positive results from the banking sector, and there's high expectations for earnings. And so far, the people that are reporting are meeting those expectations, but we'll see how that plays out. Gold's starting to rally. That's interesting. And, you know, I said the indexes are at record highs. Here's the SPY, right? And, you know, wow. But people are getting a little nervous, right? And they're feeling this stress of, you know, fear of missing out. If it's going higher, I don't want to bail, but I don't want to give it all back either, or give a big chunk of it back. So I call that, you know, FOMO is fear of missing out, and it's moving to fear of missing out, but I don't want to get burned, right? So FOMO, DBW, whatever, right? So there's that. You see that in discussions you have with maybe people you know who trade, and in a lot of the you know, forums and discussions and news articles, right? So sector rotation was happening, but that's changing. You know, we had money coming out of tech and going into consumer discretionary, but now it reversed. So it's a difficult situation, right? It's a difficult situation. It's, you know, sometimes you go, oh man, here's a hot sector, right? It's technology, it's energy, it's consumer. Right now, everything's kind of rotated and they're kind of even. And you can see that. There's a great website. Let me pull it up for you. Find my browser. There we go. Okay, and it's sector, spider ETFs, right? And they got a cool little sector tool here, little sector tracker, and you can change the time frames. Right, so this is 1 day, so that was Friday's action. What happened to all these sectors over the last month, right? Communication, consumer, discretionary staples, energy, blah, 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 right? Well, energy was down. Other than that, right, there wasn't any like, wow, standout. Typically, if you look at 1 month, you'll see some real weakness and some real strength, and it can give you some ideas. Here, there was nothing for me. I was like, oh, here's a sector to go look at. So that didn't work, right? So I think my conclusion for this week, my scanning was, man, it's just individual stocks, short-term plays, right? There can be individual stocks where there's news moving it, right? And there's some short-term. For me, short-term is a week or two, right? I don't day trade that much, right? Most of my trades are 2 to 6 weeks. For me, short-term, 1 to 2 weeks. So I think there's individual stocks that we could get some short-term plays on. So I set up a scan. You know, and there's a variety of tools that you can use, right? But when you go, oh, I want to scan a certain sector, or I want to scan for a certain pattern, right? In this case, I go, I want to scan for individual stocks. So I'm using TradeStation here as my platform, and I went, and I wrote a scan, right? And you know, the criteria I wrote, you know, I want price above $2. I don't mind trading a cheap stock, but I'm not going to trade penny stocks. I want over 1 million shares a day. I want over $1 billion market cap. And then what I'm looking for is breakouts. I want things that broke out, that crossed the 200-day moving average. Okay. And then I want it to be within 5% of the 200-day moving average. Because if it broke out and moved away, but it's gone, right? I don't want to look at that. So that I ran that scan, right? It takes about 5 minutes. I already ran it for this. And then I take the results of that scan. So what I've got is some stocks that meet my criteria in terms of price, liquidity, market cap. And then they were doing something new on a chart that now I want to look at. And so I load them onto a radar screen. I run some indicators and I can see, okay, here's how many days since it crossed the 200-day moving average. And here's where it stands on the Ichimoku cloud, right? If it's below, and look, some of them just went below, new below the Ichimoku cloud, new below, new above, new above. These are in the cloud, which can be, you know, waiting for a trend change, and then we got below and above, could be up, downtrends and uptrends. So now I've got a list of symbols that I can look at. It's 37, it's kind of long, right? But you know, I can look at a chart. I'm just trying to brag, right? I've been doing this a long time, and you know, the first thing I do when I pull up a chart is I'm gonna decide whether it's even worth looking at, even worth performing some analysis on. And you know, out of 37 here, you know, probably 20 or 25, I'm just going to discard them immediately. And so let's do that. What I do, I've got this linked. So if I click on the symbol CLDR, it's going to come up on my daily chart here with my indicators. So I'll move this and I'm going to click through these real quick. Let's see if something good comes up. All right. So like I said, I can look at CLDR and you know, I already know I don't want to trade it, right? Had a huge move up. It had a retracement that was beyond the limits. This red line is the limit, right? So I can see that I knew it. And the gap down is moving up into this gap. This is a resistance area, right? I don't like it. I don't like anything about it. And it's a very volatile stock, so I'm not trading that one. CRISPR. I like CRISPR. It's a very tradable thing. So it had a big wave 3, perfect wave 4 correction, and now it's consolidating. So for CRISPR, I like it, but do we have an uptrend confirmed yet? Well, what's the rules for an uptrend? Okay, high, higher, low, new high. Do we have that? No, we got a high, higher, low. We don't have a new high. The oscillator hasn't gone positive. We're riding right on the moving average, the 200. We're under the 50. We're still in the cloud. The cloud's still red. So this could be a good uptrend, but it really has to break out, right? And you know, here would be a small breakout. You'd have a high, higher, low, new high, right? And that, you know, by the time that happens, maybe these indicators will flip. So that's worth watching, but it ain't ready yet. And that price level is about 130.68. So I'll put an alert. I'll get a ping from TradeStation. When it happens, I'll come back and look and go, okay, is it cool now? So that's a great one to watch. It ain't ready. Okay. Let's go here. Campbell soup. It's just, look at this. It's a mess, right? It looks like an EKG chart, right? That's not good for me. GIS. I don't like it. And this is a good point on Elliott wave, and something that will frustrate people who try to try to use it. Elliott wave has a very clear pattern, and it's 1, 2, 3, 4, 5, right? And then later there's a complex correction, right? This is Elliott wave. So if I'm wanting to trade Elliott wave, I kind of need to see this shape. I kind of need to see either a new trend popping out, or a mature trend that's correcting, or a mature trend that has corrected and is starting up again. I need to see that. And if I look at GIS, right, I don't see it. Right? And that's what people will be frustrated trying to use Elliott wave, because they'll try to impose it on this chart when it doesn't exist. That's what, not every chart meets the Elliott wave criteria. That's not the only way to trade, but it's a really high probability way to trade. And GIS, I just don't like it. ALK. So if this, look at this, is cool the way it came down to the 200 at a real support level, but it would need to break above the cloud. And then there could be something good, cool going on, and that would actually be an Elliott wave. It would be a wave 4 up, because we had a wave 3 down, right? Big impulsive move down, looking for a correction up into here. It's not even close to that yet. So not even going to put that on the watch list. AMD. I worked for Intel, and so AMD was always the enemy. So this is a good looking chart. This is a really good looking chart. And by golly, I said, I really want to see that pattern. Look here, 1, 2, 3, 4. Wow, we're about ready for 5, aren't we? Cool. My cursor back. So whoa, now I'm going to drill in. I'm going to give this one a close look. All right. So what does it take to qualify? So we got a good wave count, a good potential wave count. We need a high, higher, low, new high. We got a high, higher, low, really close to a new high. The oscillator has gone green. We are above. We did peak above the 200 and the 50. So if we get up here, we're going to be above the cloud, above the moving averages. You know what? This is going to be, I said I used 4 or 5 criteria. So I got a great wave count. If it gets to that trigger level, I'll be above the Ichimoku cloud. I'll be above the moving averages. I will have a positive momentum indicator. Wow. Green board, man. It all looks good. So my trigger level on AMD is 84.86. So what I'll do is I'll come, I'll put this on my watch list. I'll show you how to do it, right? 84.86, come over here, AMD, and I'm just going to put an alert. Turn on the alert. Hi, 84.86. All right. Now, if AMD hits 84.86, I'm going to get a big pop-up on my screen here, and I'm going to get a text message. I got the alert system configured to send me a text. I'll come back and look at the chart, and if it's all go, then we'll take that trade. And then I'm going to also look, right? You got to be smart. You don't take trades blindly. I'm going to go, hey, what's the earnings date? Because I don't want to take a trade Monday and find out they're announcing earnings after the close, right? And get totally blindsided. That would be bad. So AMD, here's a great website, Earnings Whisper. It's free. They got some kind of whisper indicator. Don't care about it. They got the best database I found just for earnings dates. And so they're saying, hey, AMD is April 27th, and that is a confirmed date after the close, April 27th. So Monday's open is going to be the 19th, right? It's only going to give me like a week. Yeah, we got to see when it triggers, right? If it triggers Monday, we might have time. I said we're looking for short-term trades. If it triggers a week from Monday, we probably don't have time before earnings. So you just got to be a little bit smart about it, right? AMD, I know the company. They got plenty of liquidity, market cap, all that kind of stuff, right? So that's a real candidate. Okay. Rather than going through all the no charts, I'll show you the yes charts, right? So AMD's a yes. CERN I found on that same list. That's a yes, right? 3 up, 4 down, 5 starting. This is actually maybe ready now. It's not the perfect presentation, but it's pretty good. It is pretty good. So that one I just might be taking Monday. I got to check the earnings date, but I will. DocuSign. Same thing, 3 up, 4 down, 5. It has cleared, right? We do have a high, higher low, new high. We do, everything's here. So this is a real potential candidate for Monday as well. DocuSign and then APP. You know, the whole market's going up. Notice these are all long trades, right? Is this the right one? Oh, APO, sorry. My handwriting. APO, not quite as clear, but certainly do have, you know, high, higher, low, new high. We did have an impulsive move. We did have a correction. It took a while to get going. So that, out of all of them, that one's the weakest, but we had a couple of good ones. AMD, CERN, DocuSign, all long because, you know, oh, the market's going up, right? So those are the candidates I have for the upcoming week. Is there any symbols you'd like me to analyze? Things you got your eye on, want to see? I may like it, I may not, nothing personal, right? But I can absolutely apply my techniques to your ideas and offer feedback. Richard, CRWD. All right, I like it. CrowdStrike. Why do I like it? Well, it's super clear. It's an orderly chart. There's no big gaps. And we got a really clear wave 3, wave 4, wave 5 starting. And, you know, in terms of the checklist, we got it. High, higher, low, new high above the cloud, above the moving averages. It looks really good. If I were to take this trade, I'm going to make a note of it. There we go. You got a little, I would put my stop here under this high, higher, low, right to there, right? Say it opens at about the same price. We take our entry here. Where's the target? Target is going to be ultimately up here, right? In this target zone, these green lines. You got to watch this prior high. They can always fail. It is a major pivot point, a major resistance level. And at that level, it's 1-to-1. Up to here, we're about 3 or 4-to-1. So you got to watch that. You want to check the earnings date on it, but that's a pretty good presentation there. CrowdStrike, like it. Mike, I'll take your first one. We got other folks here, so let me take just one for you. CWH. Camping World. Obviously, I've analyzed this many times. It's kind of done. 3, 4, 5 came very close. You know, hit this target. I think we're in a complex correction, so I think it's too late to trade Camping World. Casey wants to look at NVIDIA. It's in a wave 5. It's heading up. Target is up here. The only problem is it's run so far, your stop's got to be clear down here, right? You're taking an entry up here. This is the last pullback. After a run like this, right, there's typically a little pause, even if the uptrend's going to continue. And, you know, it just looks like, you know, look at it here. It looks like it's, I would wait for a pullback. And then as it heads up again, you can get a better stop on it. But it's definitely an uptrend, right? Sam, CCL. Garmin. So obviously the impulsive move was down, then a correction up. It's in the correction zone. So the next move is likely to be down, but it has not, right? It hasn't started yet. We got a low, lower high, no new low. Cloud's still green. We're in the cloud. We got support. So for me, there's no trade on Garmin. Douglas, RCL. Same deal here. Royal Caribbean, right? Cruise line. Here's the impulsive move down, right? The correction came right to this level. So the next move theoretically is down. Now, of course, you know, they might start cruising again. If it goes above this red line, then it would be okay. That's a new uptrend. So it's kind of in this intermediate unknown states. I don't trade there, right? Paul, American Airlines, AAL. Airlines are kind of like the cruises. In terms of technical analysis, obviously, that was a massive downtrend starting back here, right? Wow, down, it's in a correction, and it's actually not, and it's starting to head down a little bit, right? So right now it's kind of going sideways. And this is where you got to apply some common sense, right? From a pure technical standpoint, big, huge move down. This is a correction. So you would say, well, the next move down. But we know structurally things have changed, right? Coronavirus hit, the planes are flying again, right? So, is it going to go down again? I don't know. I kind of want to wait and see. Just from a logic standpoint, you would think that, gee, they're probably going to go up. But you don't really want to try and trade this because we got a low, lower, high, new low, right? This is run up. So that, as I walk through that, it's just not clear, right? There's not a compelling case, right? Ivan wants to look at net. I hope that makes sense. And whether I want to trade a company long or short has no bearing on what I think of the company. It's what I think about the trade. Okay, cloud is net is cloud. This is interesting, right? So we got a big 3 up, we had a 4, and now we got a high, higher low, new high. It had a bad day Friday, but I would watch this, and if it this one moves on a percentage basis pretty good. If it carries on, right, gets above the cloud up in here, this could be a good long. So that's net. I'm making a note of that. So I like CRWD and net. All right, Sam, I'll take a look at plug for you. Plug's an interesting company. Make hydrogen power cells. So we had this big impulsive move up, and then we had this big drop off, and I think that correction is going to be too big. No. As long as it doesn't go below this red line. This red line is a 76.4 Fibonacci line. If it goes past that, that means that's not a correction, it's a trend. Okay, trend change. That, the impulsive move is now that move, but it didn't do it. So you got to wait this one out, right? You need a high, higher, low, new high, right? It's too late to short it, right? Look how big the correction is. But if you get a high, higher, low, new high, and everything else works out, there could be a nice long. You just got to be patient on this one. Asaf, I hope I say your name right, SPX. I think you're asking about the S&P 500, SPY, right? Yeah, so the SPY, it did have bearish divergence. And what we mean by that was in the oscillator, we could see the momentum going down as the trend was going up, but with lower and lower momentum. Well, with the latest breakout, right, that is no longer true. We no longer have bearish divergence. So change, went on to new highs. I want to make sure I hit as many people as possible. So I know some of you typed in multiple, and I wish I could look at everybody's, but I want to be fair to as many people as possible. Bruce wants to look at Intel. I worked for Intel, great company. I like them a lot. I hate their chart, right? Look at it's chaos. Right? It is absolute chaos. Gaps everywhere. Big moves, nearly 100% retracements, right? This is, today's poster child for not trying to impose like an Elliott wave pattern where one does not exist. If we, I never thought I'd say this, but you compare Intel's chart to AMD's, right? You look at huge moves, gaps all over the place, volatile stuff, right? A big move, 100% retracement, big move, 100% retracement, big move, right? You go look at AMD and you get, a nice progression, an impulsive move, an orderly correction into a target zone, and now it looks like we got an orderly wave 5 starting. So just from a charting standpoint, AMD's way better. From a company and a chip standpoint, Intel's way better, of course, because I'm biased. Smith, I hope I say your name right. GS, General Mills. Oh, Goldman. GIS is Goldman. So we had a big impulsive move up. 3 started to pull back, and now it's heading up again. So that looked kind of like wave 4 correction, but then they announced earnings, good earnings, right? I don't chase trends that are this mature, right? This uptrend started a year ago, right? And it's gone from 140 to 342, 360, right? More than double. Very late in this trend to go long. Now the uptrend has not ended. It's still going, right? But I'm not going to chase it this late into it. It's just me. Bruce, you want FedEx? Because the symbol for FedEx is FDX, I think. I'll assume that. So FedEx, big 3 up. Looks like a correction was starting. Actually, this was a wave 4, right? So this was 3. This was 4. Now 5 is starting. This is way different than Goldman's because we did have a correction. Now we got the next impulsive move, and the target for the next impulsive move is up here above 360. As always, you got to watch the prior high as a potential resistance failure point. But that trend looks pretty good. Ben, and I'm not going to make it through all these. You guys are awesome. But we're going to run out of time. I'll do 3 more. ARC, yeah, Kathy Woods. 3, 4, looks like 5 is starting. Look for a trigger up above these prior highs at about 130, 138, and that could be a good go, right? With a target. Grab my tool. Just rough it out. Target it up at 180. Again, watch the prior high as a failure point, but that could be good. Mike wants to look at NEO. Chinese Tesla. Could be good. Could be setting up for a wave 5 soon, right? Here's a big 3 up. Here's the correction right into the target zone. Perfect. Now we want to see high, higher low, new high. But you want to see it, look how it found support right at the 200. You probably want to give it a little time, right? You don't need to try and catch it right down here because the target is way up here. Let it really develop, right? Let the momentum switch and the cloud switch, and then you got a higher probability trade. So that could be good, but you got to wait on that. I said I'd do 3 more. So Mark, CMI. A beautiful trend. Cummins, beautiful trend. It's mature. It's run out of steam, and now you can see it going sideways. So it's too early to try and short it. It's too late to go long. So nothing there for me for a short-term trade. Nathan, Apple. Of course, we got to look at Apple. That'll be the last one. I'm sorry, I can't get to them all. So Apple, here's a big impulsive move. It's starting a correction, right? This was not a complete wave 4, actually. It was kind of shallow. So this could be wave 4s usually move in an ABC, A, B. So there could be a C coming. They got earnings coming out real quick, so you're gonna watch that. So way too late to try and chase along on Apple, in my opinion, and it's too early to try and short it. So there's no trade, right? And that's brings up a point that I'll make, right? I see a lot of traders who seem to focus in and go, okay, Apple, how am I going to trade Apple? How am I going to trade Tesla? How am I going to trade NEO? For me, that's not the question. The question is, should I, right? Do I have an advantage? Do I have a high probability? Do I have an edge in trading Apple right now? No, not at all. So I'm going to move on. I'm going to go trade something where I have super clear advantage. I want AMD, CERN, Crowd, Net, DocuSign. I have a clear advantage, right? I have a clear setup and ability to put probability on my side, so that when I say I don't want to trade Apple, it's because it's unclear. It's nothing to do with what I think about Apple as a company or their products. It has to do with trying to win a trade. Paul is asking, how do I know where to start wave counts? because I've been trained in Elliott Wave and been doing it for years. And now I have a course and I can train other folks. Asaf wants to know, do I only look at daily charts? I primarily trade off of daily charts. I will look for entries sometimes on a 60-minute chart. And sometimes if I want to clarify the bigger trend, I'll look on a weekly to back up the daily. But my main thing is on daily. And then Asaf says, why not trade options? I do trade options. All my analysis is on the chart, right? But once I identify a high probability setup with a good reward to risk ratio, yeah, I'm gonna trade it with an option, right? Absolutely. Do I have a list of my scan criteria? I kind of went through it earlier. I'm not sure if you were here, Bruce. Oh, and like this scan that I ran here. I'm sorry, it's in the recording. It's in the recording. You know, it depends on your platform, your charting trading platform. But this particular scan, right? I was able to configure it, and I set in some filters for price above $2, volume, average 10-day volume above 1 million, and market cap above 1,000 million, a billion. And then I did some indicator criteria. So that was my scan criteria. Sam is asking, can TD software, so this is TradeStation, can it do cryptocurrencies? As long as, you know, I don't have a data feed for cryptos, but if those are like ETFs, absolutely. No. I think TradeStation does it. I'm not interested in actually, you know, trading the actual currencies, so I don't have the data feed enabled. All right, so no, I don't, but TradeStation can, I believe. All right, I want to wrap this thing up pretty quick here. So we went through and we scanned. We found some good trade candidates, right? Like we were hoping for. That was the objective here. All right. So finding great trade candidates can be like a needle in a haystack, but we found a couple good ones, right? We got AMD, we got CERN, DocuSign, CRWD, NET, right? A couple others. So that's a good list to start the week with. All right. Remember, these things are essentially got to have great trade setups with a high probability outcome, reward to risk ratio, risk management, trade management. Got to have that if you're going to be successful. You guys believe that? Do you believe, you know, just use the little click, raise your hand thing or type in a yes, right? You guys believe that, right? That, you know, if you're going to be successful, you got to have trade setups, risk management, right? There we go. Got some hands, got some yeses. Casey was asking, do ETFs have enough movement? Absolutely, right? You know, one of the trades I showed, GDX, is an ETF, right? It's gold miner ETF. All right, we got some agreement. Okay. How many of you are excited about the trades we just looked at? AMD, CERN, DocuSign, CRWD, NET. Yeah, I think these look good. Oh, we got some hands. Very good. All right, lower all the hands. Yeah, okay. How many of you feel like that dude? It's like, wow, that was a bunch of information, right? He went through that pretty fast, but that was like a drinking from a fire hose, right? Well, I'd like to spend the next couple of minutes going over an offer, right, to help you follow along with this. So, you know, finding great trades is hard, and then once you find them, you need a plan, right? And so I offer that, right, with my pick service, right? You know, so I offer these in my pick service, right? Great trade setups, risk management, trade management, detailed, you know, up to 10 hours of consultation per month in my trading room and my live chat sessions. If you sign up, you get a one-on-one consultation with me. You get a link to put that on my calendar and we meet and talk. You get ongoing education, you get tools, you know, all that stuff. You add that up if you're to buy that individually from various educators, right? It's going to cost thousands of dollars, but you can get that here. It ain't going to cost you thousands, right? List price of my service, it's $127 a month, $1,500 a year. It's good value, right, for the stock picks in the trading room. I got an offer for you today. You can sign up for that service on a trial basis for 30 days, and you can do it for $37, right? So that's a pretty low risk way to check it out. All right, and Gretchen, thank you. Thank you. So there's a link in the chat box, right? So here's the deal. You can take a 30-day trial for 37 bucks. After that, it's going to be a discounted rate, 97 bucks a month, and you get 100% money back guarantee, right? So try it out for 30 days. Into the 30 days, I think you're going to want to stay. Most people do. But if you go, it just wasn't a good fit, no hard feelings, no questions asked. Let me know, give you a refund. We'll wrap it up, and it'll all be good. All right. So I got the link there. Reg asks, how big are your groups? I'm not sure what you mean by groups, right? We got a trading room we run in the morning. There's typically between 50 and 100 people in the trading room. And kind of like this, we show the trades, we analyze the market. Folks want us, me and the co-host, to offer input on trade ideas, right? We manage the trades. You don't have to attend it. In terms of the subscriber list right now, I got about 250 people subscribed to the service. So we don't move the market, if that's the deal. Casey Dunn wants to know, what time's the trading room meet? Well, let's go through all the, here's what you get with the stock pick service, right? You get the watch list of potential trades that I found. You get alerts when we're going to take a new trade. And that comes out in email, and I have a dedicated app for Android and iPhone. So you get a, ding on your phone. Hey, new trade, here's the information. You get the exact details of the trade, entry, stop, target. Most of them can be traded either with shares, right? I call it the stock and option pick service, right? You can go trade the shares, buy them long or sell them short. But I also suggest an option contract. I prefer to trade with options, right? So I suggest an option play for it, and it's your choice. You get alerts when we're gonna on the email and on the app when I'm gonna make a change, move a stop, take profit, close the trade, and you get access to the live trading room. We're open for 30 minutes. The room starts 30 minutes after the market opens, so that would be 7 o'clock Pacific time, 10 o'clock Eastern time. The trading room opens, and then we're there for 30 minutes, right? And that's optional. Some people really like to attend and be involved. You're going to get the alerts whether you attend the trading room or not. So it's just optional. It's something we do offer. A lot of people like it. We have a weekly live chat session on Wednesday evenings, so you can come ask questions. We give updates on the trades and take a look at upcoming trades. You get a one-on-one consultation. You get a link to my calendar, so we get off to a good start, get any questions answered when you sign up. And you get risk management, option trading tools, and training to help you calculate position size. We've got some special information on options and risk management with them. So all kinds of good stuff and training available. And then ongoing training and support. As we get really good feedback that the customers really appreciate the level of support that they get with the service. And there, thank you, Peter. Peter's an existing customer and he highly recommends it. Red says, do I teach you Elliott Wave myself? You'll see me using it in the trading room, right? You'll see me and the co-moderator Eva using Elliott Wave on a regular basis. In terms of formal training, I do offer some courses, right? Where we go through and teach the entire trading program, if that's what you're interested in. All right, and James, another happy customer, but you just sent it to me, James. You didn't make it a public comment. Katayun is asking how much money. I recommend at least a 10K US account to get started. And Richard's saying, hey, yes. So, but wait, there's more. If you sign up today, right, I'll include a bonus, right? My Ichimoku cloud course, if you go to my website, it's listed for 247 bucks. It's a good value, right? If you sign up today, take the $37 trial for 30 days, I will include the Ichimoku cloud course for free, right? So that's a bonus. All right. Any questions? That's the end of today's material. We found some good trades. So the basic premise of the webinar, the objective was met, and hopefully you found some really good information that that will be useful to you. And here is that link one more time. And so be happy to take any questions, any other questions that you have. And definitely thank you for showing up here Saturday. valuable time for most of us, and you showed it. And I hope you found it to be time well spent. All right. Schmidt says, what's my mindset on placing bull trades when the market seems too high? Yeah, I mean, you just got to trade the realities, right? There will be a correction in the market at some point in the future. So we look for trade setups. And like I showed on some of the charts, right? I'm not going to chase a mature trend, but there's lots of stocks that look like they're taking their fifth wave up, right? So there's some real opportunity, right? You're welcome. How many trades? Typically 2 to 3 per week is our average number of trades in the service. Typically the trades are 2 to 6 weeks. Right now, a little bit shorter term just because of where we're at with the market. Ben, do you need certain level of option permission? Yeah, I think it's level 2. You got to be able, well, first, you don't have to trade options, right? You can just buy the shares or sell them short. We go long and short. If you like to trade options, I think it's level 2. You have to be able to buy calls and buy puts. That's our strategy. We don't do any selling strategy. We don't do spreads. We buy calls. If it's going up, we buy puts if it's going down. You're welcome. The trading room is part of the picks. There is a separate advanced traders club for day trades. There's no room for that. There's a algorithm that we spit out day trade ideas, whole different thing. So we're not even doing that today. All right, I'm gonna go ahead and stop the recording, and